Okay, so today we are going to be going over the sales tax and financial reports in MaxxTraxx. And this is really going to be an interactive webinar for you guys to ask questions and share a little bit about how you're using the tools. You know, I started out with the registration asking folks who's actually using the balance sheet and who's using the income statement, and how exactly are you guys completing your sales tax reports. And we're probably at about 50%, maybe a little bit more on the income statement, probably a little bit more, but about 50% on the balance sheet. And I think part of that is because, if you really don't start out your balance sheet from the beginning, it's kind of a hard thing to evolve over time. So I'm going to talk about a little bit how we build that. Actually have a MaxxTraxx user on the call, Sergio, who's going to be switching over to MaxxTraxx here at the end of the month. And we're going to talk a little bit about how these numbers get into MaxxTraxx, how they're generated, and really how we put those initial setup numbers into the system. And we are getting 2 more people joining in our call right now. I got you there, Tony. Can you hear me? Okay, guys. So let's go ahead and get started. So the first report that I wanted to take a look at, and of course it applies more to sales tax, falls under reports, falls under financial, under category, and the sales summary. And again, this is demo material, guys, so you've got to work with me a little bit with my content. But when I click on Run Report, and as you can see, you can always see the description of the report down here. I'm just going to let it default to June over and over, just even though we're not through the end of the month, just because it's going to be easier for the webinar. So what this report is telling me, this is my sales and tax summary. This is a grand total report. And this gives me all of my part-related sales up here, all of my labor-related sales down here. And I have this set up for California, and in California all of our parts are taxable, pretty much all of our parts, and our labors are not. So I just want you to understand that, since everybody's could be in a different state, and some states tax on labor, some have all sorts of different rules. So what we're really looking at on this for the time period of the report, and it shows right here at the bottom, so this is 6/1 through 6/30. I'm just using it for this example through today. What we're looking at here is taxable sales. Everything here on the left side, okay, is taxable sales. Everything here on the right side is non-taxable sales. Okay, so at the top I'm going to have a lot more activity because I have taxable sales in our state in the upper left, and of course my labor is going to be on the non-tax side in the lower right. Now there is always going to be an interesting mix here because every state does this a little bit differently. But some things that I've found is even though my labor may not be taxed over here, some sublet laborers, for example, I think it's in Minnesota, they actually charge on sublet towing. So for example, you may have taxable labor under sublets over here if it's towing, and everything else will be on the non-tax side. So that's the reason why there's so much information, so many different columns. But it's really pretty darn simple when you just look at your totals over here. So I am showing, of course, nothing as non-taxable in my parts. So here's my total parts, 3981.77, total taxable parts for this time period. I do have my shop supply, State of California shop supply. Actually, we're supposed to itemize it out in this state, but I actually charge just a percentage since this is a demo for training all across the country. So I do have $68.20 that I charged in like a 3% or 5% shop supply added to every RO. And then notice here, though, I have $7 here for hazardous materials. Now, in our state, hazardous materials is non-taxed. Now, why is it showing up on the upper part with parts? Because notice, I actually have hazardous materials down here as well. How did these numbers get here? The way that they got here is I have a hazardous materials fee tied to a part as an add-on charge. So whenever I sell a part, let's say I'm selling, for example, an oil filter. I may have $1 tied to that oil filter that gets added to my RO automatically. That's how it shows up on this line. It's kind of magical. Where does it happen? And like I said, I can set any add-on charges. Remember, this Hazardous Materials add-on charge 1. Tire disposal is my add-on charge 2. And actually my add-on charge 3, the percentage, it's unused. I actually don't have that set up in my system. But I can decide whether or not these are going to be taxable or non-taxable. So taxable will show up on the left, non-taxable will show up on the right. So if anybody wanted to know how those numbers got there, that's how they get here. Now the reason why I have hazardous materials also under labors is because I, in some instances, and again this is also for practice and demoing, I have hazardous materials tied to, for example, every time I do an oil change, maybe I'll just charge a flat $1 for every oil change labor service that goes on my RO. So the system knows just add $1 every time you click the LOF labor code. So that's why it shows up down below as well. So obviously I probably want to do that on the same repair order, but I have a couple different instances. Actually, I think it's my menu priced oil change labor that has it tied here to the labor, and I have it tied up here to the parts. So that's why it's showing up in 2 different areas and why it's on either side. Now, same with tire disposal. If I sold some tires, I would probably have them non-tax. Tire disposal fee in California is non-tax, and that would be a non-tax sale, and I'd have a quantity here in my grand total. So what this is really saying is that on your sales tax form, you have your total parts. Here we have this here, actually minus discount, so we just use this number. We have our total parts. And on our sales tax forms, we also put in miscellaneous charge with our parts together. We actually don't break them out. But then there's a line where we can break out anything non-taxed, and that's where you put your hazardous materials fee. Now, the problem is, of course, every state has a different sales tax form that you have to remit monthly or quarterly, or how often you guys have to do it depending on your volume. But you'll notice that there's always going to be areas to put those oddball things. And obviously, since sales tax reforms weren't designed for automotive industry alone, we sometimes have to work within our own forms to put those in the right place. Okay, so pretty much we have our taxable parts. Anything that's non-tax gets deducted. And then, of course, labor. And everything under this area, again, is labor-related. The sublets or sublet labor, hazmats are tied to labors. And I actually have a technical services. You'll see a $45 charge in here. I have an add-on charge that I tie to diagnostics. If I do a particular diagnostic labor code on an RO, it says for every hour of diagnostic, of this type of diagnostic I do, I actually add on, I think it's $15. So it's probably a 3-hour diagnostic, and I charge $15 per hour for technical services because I used in my shop Identifix, or we use the AC Delco Tech line. So I actually always pass that on to the customer and, of course, told the customer about it, let them know that there was a charge for that. That way I could keep my labor rate a little bit lower, but I still was getting compensated for using these technical services for the more difficult jobs, which, hey, if you guys are, you have an expense, you need to pass it on to the customer, you can just decide how you want to do it. So, of course, all of these are on my non-taxed side. So I actually don't have to break this down if I don't want to on my sales tax form. It's really up to you. Talk with your accountant how you want to do it, and of course your state form is going to be different than mine. So we pretty much have taxable here, my taxable parts, and then I put this in a formula. And let me go back to when I was working at a shop in Colorado Springs. We actually had 3 different sections on 2 different tax returns, one for the state, one for the city and the county, or actually one for the state and county, one for the city. And we actually had to break them down and do a whole fun little calculation to get to the tax amount that I was supposed to be remitting. And when I add up the state return and the city return, the amount of total tax I collected was this amount. Now, in my state, which I don't think we have in California, but we did have in Colorado, is we would actually get an administrative, they call it a tax form preparation fee, where you got to actually deduct, I think it was 2% or something like that for doing the form. So where my system would impound into our general ledger in my impound account for sales tax, $354.38 exactly, I actually didn't have to remit that full amount. So, of course, my impound account would be collecting up money. So I would just have to remember to take that all out at the end of the year. You could do it at the end of the month or the end of the year. I'm not sure. Does anybody on the call have a sales tax form where you get a credit for preparing your tax form?
No.
No, nobody's got that? Okay, it was just a particular thing, I guess, state of Colorado. So kind of, again, this is sales tax in summary. Let me show you the difference between these two reports. This report and this report look exactly the same, except for this is also sales tax in summary. This is broken down by tax code. Now, in my system, I only have it set up for one default tax code, but we have folks that have a separate government tax code. They have resale tax code. They have all sorts of different tax codes. And what you can do is if you break them down by tax code, you're going to have a different table for each one of those, which would make your sales tax form preparation easier. So you'll notice this is a multi-page report. This is default, but when I go to page 2, this says grand total. And that's exactly what this report says over here. It just says grand total. So that's really the only difference between the two reports. Any questions, guys, on reading these numbers? We're going to talk about where these flow from, but any questions on reading these numbers? Okay, all pretty straightforward.
That default tax rate you were talking about?
Sure, let's go back to that report. Yeah.
Because I have to, of course, here in Tennessee, I have, you know, like I said, there's government, there's resale. So
Yes.
I've been printing another report to break that down, but it breaks it down on this one?
It sure does, and you can see, here's my grand totals. Let's jump out of here and let's look at setups real quick. So under setups, under accounting and payroll, we have our sales tax rates. So you'll see in my setup, I actually have resale, but I obviously haven't had any resale sales for this example. But you could have your government one here, and every last one of these lines are going to generate their own report here for you. So this one's default. So you would have one that says RES for resale, GOVT, I think is what I wrote for government. So you're going to have a whole collection there.
Okay.
Yeah, I have a couple users in Arizona that do a lot of state and county workers, and they have all special tax codes too. So that's how you get to use each section to fill each section of your sales tax report out. Okay? Not real flashy, not real fun. Just the nuts and bolts of this are important because I think folks need to really understand, you know, if I'm remitting on my form, you know, weird stuff. Why are my numbers off? And I often have people say, well, why is it in two areas? And the other thing that I've had happen is I have had this show up here where it's taxable labor. And what happens is if it's taxable labor, it's going to show up on your report, but that could be just an error. And in fact, I'll be honest, I prepped before this and then cleaned up this report because I had break inspection for some reason on my labor code. Let's look at that. If I'm going to manager and look at my labor services, I went into my break inspection, and in the record, this little box was checked. So I did a quick little fix on there. What I did, I went back, I voided the repair order, put it back on the service counter, I took off the break inspection labor service, and then I went in here, fixed it, unchecked the box, saved it, and then re-entered that break inspection back on that RO. And when I did that and then I reposted it, it took it off of my report, it took it out of this box. Just by doing that, it took it out of this box down here and moved it over here. So if you ever have any boo-boos like that, you've got some weird stuff going on, first of all, you know, all you have to think about is, shoot, I have some labor service on here. Now, luckily I only had one, and it was $45. So I figured, okay, I'm going to go to my labor sales report, which is what I went to, and I looked and I ran for that date range, and I just ran it for the beginning of the month. Thought I may as well show you guys how I fixed my boo-boo for the demo, so you might want to use it in the future. So I'm looking here, where was 45 bucks for, oh, and I'm like here, brake inspection, 45 bucks. So then what I did from there to fix that is I needed to know, okay, which RO was that 45 bucks on? So I went into my cash drawer, and I viewed my cash drawer transactions for the full month of June. And you'll see it right here. That's the 45 bucks. That's actually where I cleaned it up. I found it on 6/4, and what I did was I just took each one and I just viewed it. Oh, it wasn't on that one. Okay, that was an oil change. That wasn't that one. So I went through each one to find it. You know, where was it? Where was it? And I found it. It was invoice number 1067, and I clicked on View RO, and there was my brake inspection. That's how I knew what it was, and that's how I knew to go back and fix it. So let's kick down a real quick RO real quick, and let's make it for a resale customer. So let's say Scott Allen. I'm going to change him here. Let's put it on his Ford. Let's get that window regulator. Let's give him an oil change. So let's say Scott Allen now works for the government, so he is a special guy, and he gets a deal. So if I were to do a kit, and let's go ahead and give him an oil change, see if this will work. Generic. Yeah, that'll work. Just for this example. Now, first thing I got to do is I have to go into his account, right? And he is set as under details. He uses a default tax rate, right? So either I could change it on his customer record and make him resale, or from within the RO, I could go under miscellaneous and change him to resale. See, obviously, I changed his setting after I started the RO, so I'd actually have to change him to resale. So if he is a resale customer, and we just pay this out, I know I got a placeholder, guys, but I'm just going to work with this just for this example. Yeah, I'm going to override it. Of course, you guys never do any of this stuff, right? You never override any of that fun stuff. So he just paid cash. So now let's look and see. I just did a quick resale customer. If I go to my report, go back to tax summary, and run it, I now have, I should have some parts. Oh, this is my default report. So I'm going to page up. Here's my resale guy. See? So that's how we know, so in tax selected 0. Now it's still a taxable part because this is obviously the oil and the filter, but I didn't collect any tax on him. So if you guys have a section, which I'm sure you've seen this before, on your sales tax report where you put in your resale customers, this is where you get total parts. And again, remember I told you I put my miscellaneous supply charge and my parts together. This is where I would enter 2174 under resale parts or non-taxable parts. Well, actually, they're not non-taxable. They're actually called resale parts on our tax remittance form. So that's how you know where to get that number. And then, of course, here's our grand total. So it's going to be adding my default, which is all taxable, with, so let's see, $4,056.97 plus my 21, so $4,078. So it's going to add it together, and you know our grand total needs to be this, but now we have the opportunity to break it out by tax code. Does that make sense? You know, hopefully you guys find this helpful to be able to remit that. Then, of course, I'm sure you guys all know this. It's real simple. You go ahead and you write your check, but for anybody that's new on the call, hasn't done this before, Franchise Tax Board is who we pay to in California. Whatever the amount was, I can't even remember what the amount was right now, but we add the disbursement, and it goes to our 33600 sales tax date accrual. Now, a couple other things I want to remind you of. Now, remember I told you in Colorado, I actually had to write one check to the state, which was for state in El Paso County. And then I had to write one check to the city, which was for Colorado Springs and their wonderful transportation tax. So you can let them all accrue in one single account and just parse it out. A little bit to the state for one check and a little bit to the city for the other check. The other thing I wanted to show you is under that setup for sales tax, you do have the opportunity in this default sales tax I can actually have these go to different sales tax types, so I can run reports on different sales tax types. So you have, I just wanted you to know, you do have an option there, and that way you have a little bit more, how can I say, you have a little bit more flexibility to see what's going where. But, you know, I think it is easiest, actually, just to group it all into one. It's totally up to you guys. So I'm not going to go too much more into sales tax. If you guys have any questions about that and how to prepare that report, you know, please give us a call. We'll walk you through it. All it takes is the first time. You know, take some notes. I will be putting up some videos on that, but probably not till next month that I'll go over preparing your sales tax report. So let's go over to the other fun report that we get to do, and this is when we do our 941 payment. So after we run payroll, we can make our payroll tax deposit. And depending on what size of business, some people actually have to make the tax deposit within, 2 to 3 days, or you have to make it at the end of the month, or some people are small enough and lucky enough to do it just quarterly. So the way that the payroll tax report works, and a lot of people make this common mistake, is that, you know, if you're only paying quarterly, you would put the quarterly in here. But most people are paying monthly or weekly. When you click this Use Manual Date Selection, it activates these boxes. And these are the date selection for the day that you wrote the paychecks. A lot of people mistake that, and they say, okay, well, I wrote, you know, a check on for June 1st through June 15th because that was my payroll date for my guys. And what this will come up with is any paychecks that were written within this date range, not any payroll days worked. Do you guys know you got the difference between that? So frankly, if you consistently do this since the beginning of the year, you probably actually, it works out in the wash. But when you use a manual date selection, really, if you pay the next day, you really would want to just put in the actual single date. You know, for my example, in my system, I actually said on 6/15, I paid actually through the date of 6/15. But this is why, if you're just remitting for one payroll period at a time, just put in the date range of the date you wrote the checks. And then when you click OK, and this would actually go to...
Can I add something in there real quick, Sabrina?
That's why you're on the call, Dale. Please do.
Let me go back there. A lot of people will write their paychecks like through 6/15, but date the paycheck on the 18th or the 18th because they pay them on Fridays. So if you put the 15th through there, the 1st through the 15th, it's not going to see that paycheck that you wrote on the 18th.
Right.
What I generally tell the customers are if you're doing one paycheck, 2, 3, or 4, just put that first paycheck date, the date that's actually printed on the paycheck for your first payroll week, and then that last check that you wrote in that period, that paycheck date, the date that's on the check, and do it that way.
Perfect. In fact, let's look real quick. So I'm going to go into my bank register, my check register, and see I actually ran a payroll, and I actually ran it on the 15th. But what you're saying, Dale, and that's brilliant, is if you paid, let's say you paid weekly, so put in the date of 6/8 as your beginning date, let's say through, do the quick math, 6/29, and that would be, make sure if you're paying weekly, you've got all 4 pay checks, all pay period paychecks for that whole period, and that's what you remit. Again, the state doesn't care, you know, the government actually doesn't care if you are, you know, paying, you know, let's say on June 5th for the whole month of May. They all they care about is the day that you actually gave those checks to your employees. That's where they want to run this report off of. That's what you have to remit on your 941 payment. So let's jump back in there real quick. And I am going to say the 6/15 because you guys actually saw that I ran my payroll on the actual date of the 15th. So again, just one date, not a pay period, one date. Click OK, and I put in U.S. Treasury. And here you can see it automatically is going to go into my impound account that's set up through payroll. And again, if you guys let this default, it's all done for you. And it's going to give me a total right here. So this is the amount that I'm going to remit. And a lot of people call this in. Some people do it online. Some people just mail this in with a coupon. Some people go down to their bank and turn it in with a coupon. But the system does all the work for you.
Yeah, even if you call it in or you walk down to the bank, you still need to create a check like this and post it in the system to get rid of the liabilities.
So I would actually put EFT for electronic funds transfer. If I didn't write an actual check. Or some people actually do a bank transfer. They will transfer it into a specific totally different savings account that they have the IRS hooked up to. I know people just want to be protective. I've been there. And you don't want to, you may want to say transferring this to another bank. But, if if you're going to transfer it into the savings account and you really don't track that savings account in MaxxTraxx, then you don't have to worry about it. You can put any code you want to say, maybe you just put transfer. And it was done.
And the way to check to make sure that you've done it the right way is after you post this check. If you're doing this after every paycheck or after every month, you should be able to go out and look at 23,400, 23,420, all those liability accounts, and they literally should be back down to zero if your accounting is kept up. So that's the way to check. If you post a check and you still show liabilities in those accounts, then something's wrong somewhere.
Okay. Any questions on that, guys? Do most people, getting a little feedback on call, do most people actually have to remit this payment? Like, what is it? Is it 2 or 3 days, Dale? Isn't it 2 days? Do most people actually remit this, within the same day that you actually do the paychecks, or do you guys mostly do it monthly?
I have a lot of people that once they run a payroll, they go out and make the payroll tax deposit right then. So.
Right. Do most people on the call do that?
I don't. I do mine 2 or 3 days after.
Okay, yeah. I think we have up to 3 days is legally what we have. So we do have a lot of. Do we have a lot of monthly remitters? People that just remit monthly? I think we do. We do. Okay, Julie. Okay.
I can't remember what. My boss does it, but we only have 5 employees, so we don't have to do it every payroll.
Right. And then if you have like a 2-man shop, it's the owner and one other person, you may actually be small enough to be able to get away with doing that this quarterly. And some people, they just mail it in with their return. So, Dale, I'm glad you're on the call because I want to look a little bit about the 941 report. Where is it? Employee. Okay, this quarterly federal tax return. Now, we actually broke this in our last update. I'm just going to be real clear about that. I'm not going to pretend to anybody. So there is a little glitch on it. And you can see this form looks just like your 941 form. Dale, you want to talk to this a little bit?
What would you like me to say? Basically, I mean, this should match up to a payroll register if you ran the payroll register for the same time. But this, like I say, this report is broken right now. And generally what you will do if you're running it over multiple pay periods, you'll see a large amount of money in 7A, the current quarter fractions of cents, because it's not adding them up right. So if you see something like that in 7A, what you need to do is run your payroll register for that time frame and use the numbers from the payroll register and fill in the boxes. And generally you'll leave that current quarter fraction of cents, God, the government, I love them, at zero, or it'll be a penny or two or something like that. But
is that going to be fixed in the update?
Yes, we're just waiting for the update. So, and we're all waiting for the update. So I know how you guys feel. Well, Dale, let's look real quick. This would be under you run the payroll register report or the payroll tax report. What do you recommend?
Well, I run the payroll register and then company totals for that.
This one?
Just the company totals. I don't need to see everybody's paycheck. I just want to see the company totals for that payroll period.
Okay. Okay, gotcha. So here's our total, and then here's all of our deduction, total withholding deduction.
Down lower will be the employee or employer amount.
Employer side of it. Gotcha.
Right there, yeah, which should match.
Okay. Okay, any
And that's
questions
just
on that?
until the next update comes up. Once the next update comes out, then you should be able to use the 941 report without any problem.
Right, right. Well, I just want to be real clear about that. Well, you guys know every time we add a feature, it goes in and tries to break 50 of them. Do you guys have any questions on that report, on how to run those reports? This stuff is kind of the dry stuff, so now I'm going to get a little into what I consider much more the fun stuff, because I think, again, if you guys have been on any accounting webinars with me before, you think I just live for this stuff. But I kind of do, because I think the power of this income statement to know where your business is at, and in conjunction with using the balance sheet to understand, yeah, you may have money as far as the income statement says you're doing really, really great, and it looks like you have money in your checking account, but you guys have heard me say a million times on the balance sheet, who do you owe? Because it always comes down to, we talked about this a little bit on last week's webinar, you know, if you were to close your business today, what money do you know, where are you really at? And that's where the balance sheet comes into play. But let's look at the more fun one first. We'll look at the income statement. And I'm, again, just going to run it through the month so far. And again, this is just demo material, guys. So you can see here we have for the report period, which is just June to date, and then we have year-to-date numbers over here. We have all of our sales. So it says for month to date, we've done 10 grand. Our expenses, our cost of goods, I should say, and this is for any parts or any sublets that you purchase, and any supplies, miscellaneous supplies that you post off, and any inventory adjustments, which is, you know, if you say you have something in inventory and you find out it's really not on the shelf and you subtract it out, you can see here I subtracted out a $3.79 filter. That's what an inventory adjustment is, and it is considered a cost because if somebody breaks it or grease goobs it and can't return it or loses it, walks out the door, it's a cost of doing business, and it's related to parts. That's why it falls under cost of goods sold, and it's called an inventory adjustment. So,
and the reverse of that is, too, if you find a part or something like that and you adjust it up because the part was on the shelf and it wasn't counted, the system is going to adjust your cost of goods sold down because it assumes you found a part. So you might show a negative number in that cost of goods sold sometimes. That means that you've made adjustments of finding parts or upping parts to get your quantity. So if you do see a negative number there, that just means that it thinks you found money, so it's reducing your cost of goods sold.
Right. And when you guys start up your system, I know Sergio is going to be going through this. When you first start your general ledger or you first start your MaxxTraxx system and you have this nice clean general ledger, and all of a sudden you start putting in all your inventory. You go through the Add a Part Wizard, you're adding in all of your parts records if they aren't converted for you. And what happens is that when you put in an amount for current stock on hand, it's going to say, okay, that's capital. That's something you brought to your business on the first day of business. So it's going to go in here as a negative number. And then once you get all of your inventory in, you're going to adjust it out of this adjustment, and you're going to put it to capital. And yes, I did that about an hour ago because my system was, you can imagine, looking really not so pretty for this demo. In fact, let's just go back and look at my income statement for May. I'm sure it will show some pretty stuff. And let's see what that would look like. Oh, of course, I did the adjustment in March. So hang on, guys. Let me show you. This is important because I think some people, I certainly would, because you guys know how I am about my books. You know, this is kind of freaky when you see stuff like this. Let's see if this would work if I put it through the end of March, maybe. See if we come up with something negative. Yeah. Okay. So I actually dumped my whole program, restarted it March 1st, and put in some fake inventory for a demo. So you can see, look at my inventory adjustments. They're negative because I started up my system, and I'm like throwing in all my parts, and it's looking like I'm finding stuff. My inventory adjustments are negative. Instead of losing stuff, I'm finding stuff, just like Dale said, right? So I'm getting this negative amount. So the way that once you get all your inventory in, then what I did is I went in and did a general journal entry. And let me show you what that looks like. So I went into that 56,000 inventory adjustments, and I did, where does it say? Here it is. Initial inventory to capital. It's really small. I don't know if you guys can read it. But see, what I did is I made an initial inventory to capital. So what I did on this adjustment is I actually added $1,600 worth of adjustments to bring that account back to zero, and I credited my capital account. So it made it look like, I started this business with $1,600 worth of boxes of parts to contribute to the business. That's my capital. So that is going to show up here in a minute on the balance sheet. So I'll show you that. So just wanted to kind of go back and show you what that would look like. So let's go back to our pretty one again. I'm all about looking nice. So here we have, again, our income, our cost of goods, looking all good for the month. And then we have a gross profit. So gross profit is just that, total sales minus what you have in cost of goods for your parts. Some shops actually like to be able to put in this gross profit number their wages. They want to see, what's my gross profit after I pay commissions to my guys and I pay for my parts, because everything else is overhead. Now the system is set up to treat hourly employees and flat rate employees. See, I even have an amount over here for flat rate employees as well as my salary employees. I have the system set up, and we set this up as default to track your payroll, your wages, under your expenses. Okay? Some people want to change it around. You do have the ability to go into your default account postings and reroute that. Tell those wages to go to a $50,000 account, a cost of goods of sold account, rather than an expense account. Theoretically, we're supposed to be able to do that, but I personally, even though people haven't been able to duplicate this, I have seen this mess with my labor. It's one of my employee reports. It's one of my payroll reports. It messed with it a little bit. So I kind of go back to this. Let it go to the default unless you really, really, really have a good reason why you want to see the numbers up here instead. Because gross profit can be defined as before any expenses, which include payroll. So it says after I pay my parts, after I expense my parts, which is very different, guys, than paying for my parts. After I expensed the parts that I used during the month of June, this is my gross profit. And then here's all my payroll, or all my expenses. I have payroll on here. Look, I got, got some payroll taxes, got my unemployment, state unemployment, got some stuff in there, payroll tax expenses. And then I have sales discounts, warranty discounts. This is if you guys put a discount, 10% on a part or labor. This is where it shows up. If you tag the box that says warranty discount, you know how it is a different field on the sales detail information screen for the parts or labor? It tracks it differently, which is kind of handy because you kind of know, in my mind, a sales discount is kind of a marketing tool. Either you could just sell it to them for the exact amount you want to sell it to them, but if you want to say, hey, guys, I'm being a nice guy and I'm giving you a discount, I want you to be able to see it. You know that this really isn't an expense. It just means your sales numbers look higher and you're lowering it out here in expense. But, I want you to look at that. Now, warranty discounts is completely different. You're not actually getting paid for that warranty. Typically, you're not getting paid for that warranty. A question came up last week. What if I get a refund from Napa? Let's say they've got lifetime, alternator. So Napa is going to warranty the part, so you don't have to pay for the part if you have a comeback and you need to redo it. But what happens, you're out the labor, right? So you still got to pay your guy oftentimes. So what happens if you call Napa and say, okay, guys, you're obviously having a problem with your alternators, the fourth one I've done in the last 2 months, and you submit a labor claim. If they pay you back that labor claim and they give you cash, that I would, in my opinion, this is not Scott Systems, but the way that I would do it in my shop is I would credit my warranty discounts expenses because somebody else is picking up the expense, Napa. So I actually just do a non-invoice cash in through the money bag, and I actually credit this discounts expense account. That's how I handled it. This is totally up to you. You've got to always talk with your accountant to make sure, but that's just a handy way to handle something like that that comes down the pike. And of course, I have my rent. And of course, this is a 2-page report, so I'm going to arrow up. And here is my net profit. So I need to pick it up before the end of June, huh? So here's my total expenses. So after all my expenses are paid, I'm not doing so hot, but it could be worse. I could be negative. So that's a little bit about the income and expense. Now what happens oftentimes, remember I said there is a big difference when I talk about expensing parts and paying parts. So what happens if you start the month with no money in your, let's say you start the month with $10,000 in your checking account. You make $10,000. Okay, you take this in, and then you pay out your expenses. Okay, so if you started with $10,000, you made $10,000, you paid all your bills, and you have $271 left. But don't forget, we started our month at 10 grand, right? But some may say, but wait a minute, my checking account now only says 5 grand. What happened? Because when I look at this, you know, I look at this, I made 10 grand, I paid all my bills that showed up as, you know, expenses and cost of goods, and then all of a sudden I'm supposed to have $10,271, but I have $5,271. So where did that $5,000 go? Let's say you bought $5,000 in tires. Let's say you're gearing up to do a big tire sale. So where that comes in, so people aren't always just, you know, managing business by checkbook, which a lot of people do. And again, if you don't have the tools, I think it's smart. But if you do have the tools, you have a balance sheet. And the balance sheet will say, well, you know, let's say, like, don't look at my checking account here, but let's say I was supposed to have X amount of dollars, and I have $5,000 less. What you may end up having as an asset, you may have for inventory parts, you may have $5,000 here. So instead of this asset being cash in your checking account, it actually is inventory. So you still have that $5,000, just instead of it being in the form of paper money in the bank, it's in the form of black rubber in your parts room. So that's where the balance sheet comes in. I'm trying to run a couple of scenarios for you guys just to kind of get your mind wrapped around this, because, you know, if you don't do this all the time, it's hard to really understand how to read this. But this is very important because I hear this all the time. I hear that, you know, I've got, you know, $70,000 in my checking account. We're doing great. I want to go out, if anybody knows me, know some of my stories, I want to go out and pay, you know, $25,000 for a consulting company. And I'm the person that says, whoa, 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 Bucky. You may show $70,000 in your checking account, but before you go out and buy yourself a car, take your family on a vacation to Mexico, and pay for that consulting company, what happens? We have to first look at our liabilities. Because if you owe 70 grand in payables, like here I only owe 45,000, but if you owe 70,000 in payables to, you know, Factory, WorldPac, Napa, CarQuest, that $70,000 in your checking account is kind of not yours. Okay, remember, when I talk about a balance sheet, I always look at it this way. If this were that, this it. You guys threw your arms up. It's Wednesday the 23rd. I'm closing my doors. I've had enough. I think we've all kind of felt that at one point or another. So if you were to say, how much do I'm going to go to the bank and I'm going to go clear out my accounts. I'm going to shove $17,000 in my purse. And then I'm going to go knock on doors. I'm going to tell the people that owe me money, give me that $1,200. And then I'm going to take, oh, looks like I have $4,000 in my cash drawer, in my actual cash register. And I have $2,000 in parts. I'm going to return that to CarQuest, and I'm telling them, give me my $2 grand. So what I'm doing is I'm taking all of my assets and I'm putting them all in a bundle to see how much I really, really have. So again, we have 17 in our cash in our checking accounts. People give us money, that $1,200. We have cash in our cash drawer. We get money back from CarQuest for the parts. And look at this. I even go to my Yellow Pages and tell them, give me that money back. Give me that $1,000 back. And I even have a deposit in here. Now, let's not pay attention to our system balancing account for a moment, but you could see that it would kind of almost look like I have like 27, let's see, 17, 18, you know, it looks like I have 27 grand. Okay, all fine and dandy, except for you got to remember, before you box everything up into your little red satchel and walk off into the sunset, there's a few things we need to take care of. We need to pay our trade, we owe this to parts warehouses, payable trades. There's CarQuest, WorldPack, Factory, whatever you guys have for your payables. And then you have your notes. Maybe you owe $4,000 to, I don't know, a lift company. You bought a lift and they put it on an account for you, so you have a note created for them. So that's where you have to kind of use this balance sheet to really understand, so who do I owe? Oh, and by the way, Visa, credit card liability. That's right, I have to pay that $396 off the Visa, okay? So let's go to page 2 on this. And let's see, we always have, we talked about this last week, then we also have to pay Uncle Sam, remember? We owe Uncle Sam here $1,100 in sales tax. Okay, so now we're really starting to whittle away at my my $27,000 that I thought I was going to walk off into the sunset with. I got to pay the IRS. I got to pay the state unemployment. I got to pay all this stuff. So yep, I got to pay $4,000 to those guys. So that's where it's really important to realize that the income statement shows where it's coming in, and the balance sheet will say, well, who owes you money? Who do you owe money? So it gives you a better picture of what to do with your cash instead of just getting all excited that you have a ton of money in your checking account. Your online banking looks pretty, even though it's tempting. Now, the equity accounts is something that's a little bit different. Owner draw is if you're a sole proprietor and you just pay yourself. You're constantly on a weekly basis or monthly basis writing yourself checks. You're drawing down your equity. That's why it's negative. You're pulling down your equity. Now remember, I walked in the door. Remember we said I walked in the door March 1st with $1,600 worth of boxed parts. Remember? That's where that capital shows up here. That's something I brought to the business. And I also have earnings year to date. I've actually earned this much. So this is what my company's worth. Okay? So that's a little bit about how this balance sheet can give you information. Now, I got some great feedback from somebody that's looking to buy our product, and they said, we want a cash flow report. And I'm like, a cash flow report? That's interesting. Tell me about it. What that report does, guys, and it was very cool. We've written the report. It's going to come out in the next update once it goes through beta testing. What that does is it kind of takes your income statement and it adds like an extra line that's up here that says, okay, Sabrina, let's say starting checking account, $10,000, okay? And then it would take all of our income, and then it would take all of our cost of goods, and it would take all of our expenses, kind of a simplified explanation of it. But then it would get to the very end of it, into that cash flow report, and it would say, minus the money that you owe people, plus the money that of the people that owe you that you put on account, then the cash flow report has this grand number down here. So it's almost like in one report, in one flash, I can see where am I really, after I do all that whole rigmarole of, collecting up all my money from the bank and from returning my parts, once I collect up all those assets and once I pay off all those liabilities, what do I really have left? And that's what that cash flow report is going to show us. So I'm real excited about that report, and I hope you guys, find it useful. And again, why do we even go through all this? Some people say, well, I do this to do my taxes at the end of the year. Why this is so interesting and so important, and another report we're going to have is where we can compare month over month how we're doing, is because this tells us, do I need to step it up? Maybe my income in January and February is not so good. I'm rocking it in September, October, November. I'm doing great then. But if I can see historically that my income is typically pretty darn low in January and February, this is what I used to do, is I would start the shop that I work for in Colorado. I would say, okay, that's it, Jim. It's October. We're starting to sock away money. And I would tell them that, historically I see that we're struggling. Okay, we're struggling to pay our bills January and February. We need to start socking some cash away. So then we would start building what? Our balance sheet. Our balance sheet is where I need to start pigeonholing, rabbit holing that cash because I need it later, right? So that's why that's important. The other thing is expenses. As you look at everything that you spend, and I really don't have that many expenses. I don't know about you guys, but I break all this down so I know office supplies, advertising, internet expenses, cell phone expenses, and then you have all your maintenance auto truck, maintenance building, maintenance equipment, Another one, financial warranties. So this is where you see it, where the money is going. So by having visibility as to what your expenses are, you know, you may look at this and say, you know what, my salary is just killing me. My hourly guys is in line, my flat rate, which, you know, are my commission-only guys, I only pay them if they make money, that's in line. But, you know, maybe my salary is just way out of whack. It's way too high. You know, there's a couple different ways of looking at this. We can say that we need to lower our expenses, or we may just say that, you know what, I need to take my assets, and people are some of your assets, and I need to increase my bottom line. So how do I increase my bottom line? And that's when we start talking about all the different marketing things that we need to put in. You know, maybe we decide that I'm doing the very best I can, and my expenses are out of whack, so what do I need to do? How else can I increase this rate, guys? Sales labor. I can increase my labor rate. Maybe I look around and I realize that, shoot, my labor rate is, you know, 78, and the guy down the road's 90. You know, some shops, I got a shop here in the Bay Area, got some people at 144, some people at 158. If I said that to people in Kansas, they'd probably fall off this webinar. But, you know, that's where this is a powerful tool. It lets you see, you know, where can I increase this? You know, what's kind of that rule of thumb? And, of course, mine's off a little bit. Usually 50-50, 50% of your sales should be in labor, 50% of your sales should be in parts. Again, that's why you pay the big bucks to the consultants. But you can see maybe that maybe your parts are not quite at that amount. Maybe you actually need to bump up your parts a little bit. You know, 5% increase across the board on your part selling price can make a big deal at the end of the year. So that's why this report is so important. And we're very lucky. MaxxTraxx generates almost all that information in the background automatically. The only thing we have to do is write our repair orders, take in payments, and restock all of our parts tickets, pay it, and pay all of our bills out of the system, either through pay bills or write a check. And by just keeping everything that happens in real life in your shop duplicated by one of the features in MaxxTraxx, you are getting a real life picture of where your business is at. So that's where that knowledge is powerful. So you know by month over month how you're doing. And then, you know, how many times has this happened? One big, huge warranty job. You know, I accidentally was, I'll be honest, I was delivering a vehicle back in the 90s, and it was an Otis Spunkmeyer cookie truck, and yes, I melted down the engine because I wasn't paying attention, and I was delivering it to a customer. It was horrendous. So that killed us. That killed us. So if you look, where would that show up? That would go on my income statement, and all of a sudden, we had to pay out to International. I had to pay out a financial warranty. Well, actually, I had an expense. We just, frankly, wrote them a check. You know, you write this out, and because you have a claim, that's going to knock you for that 1 month. So where you might think, you know, month after month, why did I do so bad on that 1 month? Well, if you look at your expenses, you may find that anomaly. Conversely, let's say we run a tire special in July. We decide, you know, we're going to tell people we're going to run a big summer special on tires, and you notice you get a huge bump. Now, of course, you guys all know that they really don't make as much money in it, but you may notice that your sales number is real, real high, and then, you know, maybe your cost of goods is real high too, so your profitability may not be as high. So, yeah, it was a good idea, but did we make a lot of money? Not as much as we thought, but we may also find that AC work. We get this huge bump in May and June because AC work goes up. So maybe that's something we need to capitalize on. Maybe that's something we need to advertise more, let people, make sure people know. If they're coming in for an oil change or coming in for tires because we're a general repair, maybe they need to know that we also, you know, have specialists that work on AC. Or maybe we need to, you know, run a mailer or a marketing specialist, send out a coupon, because that's a real moneymaker for us. So that's how you can really get some good management decision-making information out of these reports. Any questions on this? It's been a quiet group.
I have a question.
Have you guys found this useful?
Yes.
Okay. Okay. Any other questions on that? Well,
hello?
we are. Go ahead.
Can you go into the parts inventory evaluation? It never matches, and it's never matched the balance sheet. Why is that?
parts inventory valuation not matching. What happens is if somebody goes into the parts account, and this is your 13,000 account, you can completely right now, bypassing my parts department completely, I can make an adjustment in here. I could do a general journal entry. I could do all sorts of different, I could delete something. I could do all sorts of things. Now what happens is that I find that people are doing regular workflow. And if month after month after month, they get it squared away at the beginning of the month and then it gets out of whack, the valuation and what your general ledger says is getting out of whack. Even though you correct it and then it gets out of whack month after month, there's usually a workflow issue. There's something that's going on. There's some way that we're entering information or not entering information. You know, really that's the kind of thing where you just got to kind of dig in and do a little research. And I think the best way to do that, in my opinion, and jump in here, I don't know, Dale and Rex, if you're on the call anymore, if you're off on tech support calls, get it narrowed down and say, we're going to fix it. July 1, that's it, cleaning this up. And then go in and check it every day and see if, you know, every day if you can for a month, see if you can find out the day that it gets out of whack. And then we can go back and tease out, there's some workflow in the system that's causing some entry onto the 13,000 account, either in or going out. That'll cause your GL to be different than your valuation.
I was going into a totally different report than you're in.
Oh, were you going into?
I was going into the, yeah.
Parts.
Inventory evaluation. Just regular inventory evaluation. Down.
Okay, where is my little eyeballs? Why don't I see my valuation?
Right here.
Right there.
There you go.
There you
go. Okay, so if I were to run it, let's see, it's going to do everything, right?
Yeah.
So here's my number. Okay, you can see that mine is way out of whack too. And I'll tell you why.
Well,
I was working.
It might not be out of whack. I mean, you have to take that positive and subtract that negative from it, and then check that number against what your general ledger says. You could have a bunch of negatives in inventory.
No, go ahead. What was your? And I appreciate that, Dale. Do the math.
But that doesn't match the balance sheet. Well, ours doesn't.
And it doesn't match mine either. Okay, so I'm going to do this. So it's minus. Let's do this. 5604. I mean, this is a great question. I'm so glad you asked it, because this used to happen not so much in MaxxTraxx with me, but with MotorTraxx. Man, oh man.
And it's happened both of ours.
Okay. Yeah. I mean, once it got out of whack in MotorTraxx, I was done. I was cooked. I couldn't fix it for all the tea in China. So if I were to go to my balance sheet and look at this real quick, what should my inventory say? Now, that report just said negative 340810.
Yeah.
So my balance sheet for my 13,000 says 2,059.
68.
So why am I out of whack? So I'm actually out of whack about 56. Oh, right around 5,600. And I'll tell you why. I was just playing around with a guy that has a gas station, and he was tracking fuel. So we were just playing around, and I put a huge inventory adjustment off to fuel into my general ledger. Now, really, so what do you do at this point to clean this out?
Now, every month we just make a journal entry to make it right.
But what's interesting go ahead.
The first thing I would do is I would go look at the beginning balances that I put in to make sure that they were correct back in the beginning when you entered your beginning balances. You have to also realize that there will be some differences, pennies, maybe even dollars with rounding. But if you get into the, over $100 and up that you're off, it's either a journal entry made to the 13,000 account or there's some issue with that beginning balance when you started. Because, you put a beginning balance into the value for 13,000, then you add all your parts. So you could literally add parts that are not part of that valuation when you're adding parts, or add a quantity, one more than what it was, make a mistake there. So those are the first two places I would look, because when you go ahead.
So check your chart of accounts for the 13,000 account and see
where. Yeah. Starting with this one, right, Dale? We start with the valuation.
No, I would go out of here. I would close out of here, and I'd go to accounting and chart of accounts and go to my 13,000 and double-click on it. And then I would find, and I would put, whatever I started MaxxTraxx to be able to find that beginning balance entry that was put in. That's generally where the first mistake is made.
Gotcha. How long ago did you guys start up? Has it been a while since you switched?
Well, yeah, last year, at the beginning of last year.
Yeah.
I mean, it's real easy if you want to get to a point where it matches now, is to make an adjustment, like you say, and I would make the offset to inventory adjustments.
But we're making the adjustment every month to make it right.
There's
and
something,
then it's still getting thrown off.
There's a part or something that's posting to like another 13,000 account where it doesn't have use default accounts or something on it. It's a different inventoried item. Some people have two inventory accounts where they put certain items in a different inventory account to keep the value away from the regular part. So on the general ledger, you have to add those two items together and check that against your valuation report. Or you have a part that when it's posting, it's just posting to a weird spot. But yeah, it's definitely something we need to look at. It shouldn't be going off every month.
Yeah.
Okay.
Yeah, and sometimes it's just we do funky workflow things. I see them all the time. I'm sure, Dale, you see them all the time. But when I'm training people and I'm showing them workflow, it's interesting how creative people can be. And they come up with different ways of doing things. And, frankly, the smarter you are, the more interesting ways you come up with doing things. And they make sense. I mean, if you really didn't understand, if you weren't mind readers and understood exactly how we designed this whole system, it could happen. So it's not.
Do you use product codes?
Me?
Yeah.
Yeah,
not Sabrina, the customer. Yeah. I mean, you can have a product code that on a part that instead of posting the 13,000, you have it posting somewhere else, either by mistake or by wanting it that way. A certain type of part that you want posted a different way. So the first thing I would do is check all my product codes to make sure that they're all posting the 13,000. And if they're not, then find out why. And then maybe that number shows up on your balance sheet somewhere that you should be adding to your 13,000 account to come up with that valuation.
Good point.
So it definitely could be a product code that just instead of having 13,000, it's got inventory adjustments in it, or it's got 13,300, another inventory account, or something like that.
Okay, so where we're talking about that, product codes, and if we have a product code for parts, so what happens is you can manually create these product codes and tell them where to go.
There's a perfect example right there for fuel. If you buy fuel on a restock ticket and you update inventory because you're selling fuel, you should have an asset account called 13,500, which is part of your valuation report, but separate on your balance sheet, where you would have to add 13,000 and 13,500 to match your valuation because that fuel is still going into inventory. So every time you buy it or you sell it, it's out of the wrong account. That sounds like what's going on with you right now.
Okay.
That could be. And that's exactly, we were just playing around because this guy has a gas station that he wants to just do one entry at the end of the day for all of his fuel going in, all of his fuel going out. So that's why we created this special one. Exactly, Dale. Well put. So that's just something we'd have to look at.
Okay.
Yeah, good question. And don't give up. I mean, I know that people have, and I have to say, in MaxxTraxx, okay, I'll be honest, I could see giving up. In MaxxTraxx, there's no reason. There really is. Of course, Dale, you're ready to have a comment on that one. With the thing is that we have so much more flexibility in MaxxTraxx. We really do. We have the ability to go back and void and repost stuff and correct it right when we do the boo-boo. And I do them all the time. I mean, it's just part of doing business. But like I used to always say, if I mess something up on MaxxTraxx, I had part the Red Sea to fix it. So I think there's a lot of value in having these numbers accurate. And I know they seem really, really challenging, but once we get the workflow dialed in, they will start flowing correctly. And a lot of people actually have kind of either converted over from MaxxTraxx to another program or never really got their balance sheet set up. I would pick the end of a quarter or end of the year and say, okay, we're going to draw the line in the sand, and we're going to go forward from this day going forward. We're going to straighten up that balance sheet. And, you usually can just get away with using your income and expense statement for doing your taxes. Not a big deal. But if you want to be able to use this this as a management tool, we really do need to get everything in the system, which means setting up that balance sheet. And I think maybe we should just have a webinar that just talks about setting up a balance sheet. I'll send out an email at the end of this webinar, and you guys let me know if that's something that would be valuable, and we'll just start with a fresh one. Or better yet, we'll start with a messed up one, and we'll go through how do we clean that up. Because it's a daunting task, especially if you don't have a real handle on this. And I still have to stop and pause and think about it, and I've been doing this for almost 20 years. So it's something that I would not anticipate anybody, just being a whiz at right out the door, unless, of course, you're a CPA and you're working in the shop. But it is something that's doable, and we have put the tools in place to be able to, once you get it set up straight, keep it simplified, then it's all going to flow just in the right direction. And this is why, this is a very good example with these product codes here. This is why a lot of the times I don't recommend people using product codes unless there's a real purpose for it. Just keep it simple, keep it on the default, keep everything the way it was originally set up, and then when you do things and you do kind of customize here and there, please feel free to give us a quick call. And now, just making more business for you, Dale. Give us a quick call if you want us to do a quick little preview of what you did, because it's going to be a lot easier just to make sure it's set up right from the get-go rather than having to tease out and untangle some situations, that go on and on after a couple of months. So good questions. Thanks for asking. That was very valuable. Any other questions or comments, guys? I hope this was useful. And if we should do these,
thanks very much.
Good, good. Please, I am getting down to Rhonda is actually doing our webinar next week. I'm real excited. She's doing it on QuickBooks, which I really don't know much about, which you guys know. So we are getting ready to put out our webinar schedule for July and August. It's actually going to be focusing a lot, guys, for the next 2 months on a 4-part series, converting from MaxxTraxx to MaxxTraxx. We really have a lot of folks that are still in that process, so we're going to really spend some of our webinar time on that. So it may not be of interest to everybody that's already on MaxxTraxx, but we're going to try to interweave some other webinars. And we've also thought about just having a wild card webinar where we're going to say we're going to talk about accounting, and it's going to really, we're just going to call it a wild card webinar. Let us know what you want to talk about and ask your questions. Because we've talked to a couple other companies that do the same thing. They kind of just have a wide open forum to ask some questions. And we just kind of give it a broad, kind of like a broad heading. So if that's something that you guys might be interested in, the only way we can provide these and make these valuable is if you guys give us feedback from that email. So this is your last chance, and I'm really asking for some insight, because a lot of our webinars that we've done over the last 2 months, actually probably 2/3 of them, were all suggestions from our users. So I appreciate that. Well, you guys have a great week, and we'll see you next week on the QuickBooks webinar. I'm excited. And hopefully,
thanks very much.
Okay, guys, take care. Okay,
thank you.
Bye-bye.